What's up, everybody? It's Mitch here. It is the morning of Saturday, January 29th. This will go down in the books of history as the first day of the historic Freedom Rally or Freedom Convoy that is landing in Ottawa this morning. But that's not the topic of our discussion. I just thought I would make mention. This is the date of filming, and it's a very interesting time in our Canadian history and the sort of narrative and story that's playing out in our Canadian lives right now. But without further ado, I want to move on to some discussion about this week's inaction on the part of the Bank of Canada to raise interest rates. Now, before we dive into this, I just want to say I'm no expert on this topic. But I just wanted to come ahead and weigh in on this topic a little bit so that my audience can have a version of some of the material that's out there and the opinions that's maybe a little more easy to digest. Just watch this video instead of reading through all the articles yourself. And I'm just going to try and do my best to sort of bring some of the main arguments to the forefront and then just give you a bit of my take on how I see this affecting our local markets here in Peterborough, Ontario. So just to give a bit of a background, the Bank of Canada has been suggesting for a long time now, at least to my awareness, as far back as 6 months out, that they were indicating rate hikes were likely coming in the second quarter of 2022. Now, that was all predicated on rising inflation, which we know our real estate market's absolutely out of control for everybody who's watching on a week-over-week basis, which, by the way, if you guys are watching and you're getting any value out of these videos, if you care to share them, that's awesome. But if you like and if you don't regularly subscribe, if you like to subscribe, it's much appreciated. But for anybody who's been watching, everybody out there knows that we have an absolutely out of control real estate market, and that our inflation in terms of our consumer price index, for those who are unaware with the terminology, and it's just basically a basket of goods and services that the government tracks to sort of keep a pulse on what the cost of living is and how much it's rising. And they always have a target of keeping inflation right around 2%. They don't want it to go much higher, because as the price of goods starts to leapfrog itself too much month over month, people tend to veer towards hoarding. You get activity where people will borrow just to buy because the cost of things will be so much more tomorrow. And they don't want deflation, because when the price of things are sinking, then people have the tendency to hold off on buying anything. Everybody clams up, because why buy today when it will cost less tomorrow? So that's just the most brief, basic background on what inflation is and what the government's or the Bank of Canada's mandate is with this. And I use them interchangeably a little bit too often, as many do, the Bank of Canada and the Government of Canada, even though they're not meant to be working as a single body. They're supposed to be acting sort of out of their own sets of mandates. But moving on to the Bank of Canada's inaction last week, it's all through the headlines. Everybody was predicting that an interest rate hike was probably coming, and they elected instead to say, we're not raising rates right now, we're going to do it in March, or basically keep an eye out for rate hikes in March of 2022. So what does that mean? I'm going to flip back to my notes here and say, broadly speaking, a lot of people are commenting. A lot of the media commentary on this is that the rate hike would have been widely accepted at this point in time. A lot of people were already anticipating it. There wouldn't have really been much flack on the Bank of Canada's part if they had just gone ahead and increased interest rates. It likely would have only been a 25 basis point raise. That's 0.25%. And it would have shown that, hey, we're actually taking action here. Inflation in December, I believe, was right around 5%, which is apparently the highest number on record in nearly 30 years. And there's a lot of speculation or a lot of discussion that goes on in sort of the investment communities and everything outside of the mainstream media, that inflation is probably actually much higher than they're stating that it is. But that aside, no matter what, if it's 5% and the Bank of Canada's overnight lending rate is 0.25%, it means that the price of everything is going up at approximately 4.5% higher than what interest rates actually are. So what that means is that people are incentivized to borrow, to buy, because in real terms, they're getting free money. They're getting more than free money. If you take out a loan right now on anything, if you have a line of credit, you have a home equity line of credit, you go and get a mortgage, and that's costing you, anywhere between 0.5% to 3% to borrow that money, but the value of that asset is rising higher, anywhere from 4 to 5 to, we're seeing our real estate go up 20% year over year. We're seeing meat and other staples go up at double digit rates anyhow. So it means that there's an incentive in the economy to borrow money to go out and buy, because the value of all of the assets that you hold is going up, and it's going up much quicker than the cost of the debt service that you're holding. So it creates a dangerous situation where the inflation can start to track up very, very quickly once you're into these numbers of 5%, as they posted in December. So the Bank of Canada took no action. What does this mean? They said, we're going to take steps in March. There's also articles out there saying, hey, don't mistake this as them being flimsy. They're being firm. They're saying, look out. Don't say we didn't warn you in March. Rate hikes are definitely coming. Okay, so a couple ways to look at this. First off, I think that, in my own opinion anyhow, and it seems to be a pretty broadly held opinion, is that this signals to us they're more worried about deflating things than they are about having inflation track a little bit higher. They're just very, very scared to make the wrong move. They're very timid about how to approach this, and they are overly cautious about. They're fully well aware that the amount of money circulating through our economy is all predicated on these asset prices, namely real estate as one of the large ones. But a lot of the credit that's been extended is based on assets that are potentially overvalued. So they don't want to crank up rates too quickly, cause a scare, cause a sell-off in assets, whether stocks, real estate, or otherwise, and cause prices to go backwards and collapse this whole thing. Not making this rate hike when it would have been widely accepted that they could have done it. They could have easily explained themselves. Everyone would have said that's okay. The fact that they didn't do it shows that they are so afraid of deflating this thing and potentially, popping a bubble, so to speak, that I think it shows that they're going to proceed extremely cautiously, no matter what sort of rhetoric or message they're coming across with. They might be saying, hey, we're warning you now, but we're coming in hot in March. We're coming through. Look out. The rate hikes are coming hot and heavy. I think this says, what they're saying and what they're doing is two different things. I think that what their actions speak is that they are extremely afraid to overact and pop this thing. So, second, they're very committed to sticking to their word, which is kind of refreshing in one sense, because our federal and provincial governments have been willing to flip-flop on just about anything as we've proceeded through this crisis, and new rules can come out of left field. The next lockdown, the next change on some mandates, it's coming. They're always coming, going. It's always changing. So it's somewhat refreshing in the sense that they are saying, hey, this is what we said 6 months back. We're going in the second quarter. That's what we're going to do. Kind of nice that they stuck to their word, but obviously, we don't need our central bank in a straitjacket based off predictions that they made 6 months ago when the reality has changed. Inflation's continued. It's no longer deemed to be transitory. We're seeing that we have prolonged supply chain issues, and the cost of borrowing has been too low for too long that it's starting to get out of control. And they keep on saying, we know that we run the risk of the expectations of price inflation being baked into future pricings, and that's what they don't. They want to get ahead of that with these interest rates and stop people from borrowing to buy in too far into the future. But arguably, that's well underway. I think people price expectations are baked into everything that everybody is doing right now, and how they're spending their money, how they're acting in the real estate market, and I know myself personally how we're dealing with our groceries and everything that we're doing. Okay, so we know that in every case, no matter what they do, they run the risk of either underdoing it or overdoing it. And as long as there's some semblance of stability in the economy, they no longer have the excuses about just pumping and printing money and feeding everything they can at it and getting away with under the guise that we're in an emergency. As soon as things are stable, now they run this. They're always in a delicate dance and balance here of trying not to over fuel or over quelch this thing. So this is going to be an ongoing battle from here on out now if our economy remains stable. But what I want to say is that if you look at what they did, when you look at the situation pragmatically right now and say what's happening right now in this exact moment in time, inflation's 5%, so they say. It's likely much higher, and the real estate market's out of control. They probably should have raised rates. They probably should have just raised rates, because no one could have really barked too hard at what they did. They easily would have been able to explain themselves. And even though a lot of people are going to be under pressure as soon as rates do start to rise, it's one of the only tools we have to stop this speculative mania that we have going on right now. And arguably the investor fervor is totally out of control, and it needs to be the government needs to signal, hey, the party's going to end soon. These super low interest rates are going to change. And it's that way investors have some way of looking at your future cash flow projections on your real estate, not only in terms of how much the cost of servicing and ownership is going to be and how they might not cash flow in the future if you buy today at these really low rates. Also, you can't be continuing to project and expect such big future price gains. They need to put down a strong message here. And what they've done is just give basically investors and house flippers a signal, green flag racing for the next 3 months. Wide open. We're already at the absolutely most ridiculously peaked up point in the graph in terms of real estate appreciation. And now they've just said, hey, the free for all continues. Have at her another couple months of near double digit price gains in market like ours, like Peterborough. I think for them to stick to their message, yes, in one sense, for them to stick to what they said months ago, they want to keep calm and cool and proceed with their word and stick by it, but they have a mandate. So I think, one sense I thought of this in terms of an analogy is that if hey, let's say that the Freedom Rally is moving towards Ottawa, and they thought that it might land there around February 30th. And then the government says, okay, well, we'll rally up the RCMP and a bunch of, sort of provisionary forces to keep things calm and cool and collective. We'll land them there February 30th, because that's when we expect that this is all going to be happening. But then as it turns out, the rally just so happens to show up on, a little bit early. It's January 30th instead. And what if they said, well, we said that we were going to show up on the 30th of February, so we're going to stick to our word and we're just going to wait and show up then. And everybody said, well, the rally is here, guys. It's going on. We need the protection and the control now. And they said, well, we don't want to overwhelm anybody by showing up too early and before we said we're just going to ride this one out. Similarly, if there appeared to be a fire about to start on a building, and the firefighters said, you know what, we're going to prep everything and we'll be there in 1 week. We're going to be absolutely ready to deal with this when it needs dealt with. But then someone called and said, hey, you know what, we thought that this fire might start to happen. It might get out of control. This sucker's burning. This building's totally on fire, engulfed. This thing could spread and take over the whole city in no time. And they just said, well, like we said, we said we're going to be there in a week. And so true to our word, that's when we'll be there. And when we get there, we'll douse her, we'll keep running water on this thing long beyond when the flame is out, and we'll just keep putting it to it. Hope everybody's good with that. You can easily see how that line of thinking just doesn't really make a ton of sense for those who don't understand or have some basic grasp of what inflation is and what it can do in the economy and how it creates or skews the incentives for sort of wrong actions for people going forward. So everybody thinks that they probably should have made a rate hike. They didn't do it. What's it mean for us going forward as residents in a town like a city like Peterborough, Ontario? Unfortunately, I think it means that in the next short term, we're going to see continued massive pushes from investors to get a property. The flippers are going to be going crazy. first-time buyers, unfortunately, it is the same sort of situation. Get in now because prices are going to climb double digits every month up until when we see strong signaling, legislation, something done. Even March, if they just raise it 25 basis points, it's not going to do anything. It's arguably it's just going to speed it up for the first section of this entire sort of cranking up and heightening of rates. It seems like historically things continue to get worse right up to the point where people reach absolute insolvency and are totally crippled by the rates. So I think that things are only going to get worse. We're headed for the next 6 months do not look good. Continued projections of massive price inflation, not only in real estate, but in all asset classes and in your grocery bills, in just about everything. So we would like to see a rate hike. We didn't see one. We'll keep an eye out. That's just this week's news in real estate. The message continues. Inflation's going to be fast and furious. Prices are going to continue to go up. For end users, you want to have the long-term vision right now. Investors, guys, have mercy. This market's out of control. Instead of trying to make one more buck right now, I think everybody have caution. We're all in this together, and a lot of the market activity is investors right now really pushing hard and extending their credit. It's dangerous in the long run, not only for the investors that are overreaching and overexpanding. If we by any chance do see this government act a little bit too aggressively on interest rate hikes when they do start, if they stick true to that. But also we potentially are just deviating so far from the mean of where these prices should be that we've blocked a lot of people out of the market already, and what's going to happen in the long run, I don't know. Lots of articles about how much this demand really is being fueled and pushed over the top by investors. There's a lot of factors at play. We talk about the immigration numbers all the time and population growth via that, the supply constraints. But anyways, no interest rate hikes. Bad news for real estate prices, guys. Going to continue to most likely shoot up. And that's it for this week. Hopefully touch base next week with another update based on the week's news, and hope to keep in touch with you guys going on a weekly basis here. Hope everyone has a great weekend, and I hope everyone stays safe down in Ottawa. And this message comes across clear, sturdy, and respectful. And we continue to see or start to see positive change on all fronts of our Canadian governance. Thanks a lot, everybody, and we'll talk to you next week, and look forward to catching up with you down in the comments. Take care, guys.